Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. Well, 3 years of work to get right here. This is absolutely fantastic. We're very, very excited today. This is the power of long-term investing. Doing your research, staying in the course, and never leaving the markets. Go through the ups and the downs. Dig the ditches in the hard times, getting ready for the good times. That is the very nature of what investing is all about. I'm not a trader. I will take trades when necessary, but right now it's about digging ditches and remaining in. And I've also put my money where my mouth is, and I've used my margin quite considerably because we had macro conditions, we had false claims, we had Donald Trump saying the world would come to an end, or the USA would come to an end in 48 hours. That never happened. We had all kinds of external macro conditions to say, to drive the markets down. We had those rotate out of high tech, great quality businesses, well-run managed companies with buckets of money, great innovation, problem solving, all these kind of things, and say, no, I'm selling all of that because I want to buy a lot of rubbish on the Russell, which they did. That presented opportunity for me. I looked at the balance sheets, I studied it, I waited, I bought more, I bought more, I bought more. I turned the margin on, I bought a lot more. I didn't go anywhere, I stayed here. Now we're about to reach all-time highs. $80,000 on my brokerage account, $25,000 on the Roth IRA, and 105.8 now, nearly 106. The all-time high is 107. So we're not quite there at an all-time high. But let me explain. Right now, I'm up 2% today, 1,600 just in my brokerage account. I've got margin applied, so I am basically amplifying what's going on. If we look at my Roth IRA, which is just the S&P, you will see the S&P is up 1.25, and I am in fact up 2.1. So I'm virtually doubling the market. I'm beating the market by approximately double, thereabouts. Now then, if I was in a more tech-weighted stock, ETF perhaps, or individual stock, say Nvidia, for example, I would be up a lot more today. In fact, I would be up, if we look at Nvidia, 7%. Now, 7% is a nice rally today. However, I prefer to hold and own and never sell the index. So I actually own about $7,000 worth of Nvidia without actually owning it or being affected by the day-to-day price of it, if you like. Because what's going to happen now is a lot of money is going to come out of the Russell, but it's going to go into quality stocks of the S&P that have not yet performed that well, which will perform well now because we're going to get rate cuts. Doesn't bother Nvidia. They don't actually care if rates are down. In fact, they prefer if rates are up. It crushes the competition and earns them money on their cash. The reason why the S&P is the best place to be today, and it's probably the best place to be for the rest of the year, is because you are not receptive to individual stock fluctuation, but you are going to benefit from the power of the tech on the index. And remember, the index is tech weighted, not as much as the NASDAQ, but also the Russell will sell off and come into the lower levels of the S&P and buy up the quality stocks. So you've now got everything going up in the S&P. And I mean everything. If we look today at the heat map, let me share with you the heat map. This is the heat map right now of the S&P. You will see pretty much everything is green. There's a bit of red there. Microsoft is just having a delayed reaction. I expect that to be up today as well. They had a good earnings last night, and we learned at the end about their going forward with their AI. So I expect this to bounce back. When it does, it will pull up Nvidia even more, Tesla even more, and of course the S&P even more. So this is absolutely a perfect day. It also leads in, okay, let me just get this right here. It also, face lock, there we go. It also leads into the FOMC report today, the Fed. We're going to cover it all live. So this was made during a live video. So hopefully you subscribe to the channel, and yesterday you were with us for a viral moment. We had a viral moment when many other YouTubers, and I'm not even a YouTuber, I've said this over and over again, I'm the world piano man, I'm an entertainer, but I'm also an investor, and I use YouTube to broadcast because YouTube is TV and I want to be on TV. I'm not a YouTuber. I'm not making videos just so you click on them and you subscribe to me. No, I'm serving the public, and I'm trying to build a live audience every day, 12 hours a day, sharing with you the truth. Others on YouTube have been saying doom and gloom. Meet Kevin is doing it right now. It's doom and gloom. Everything's going down because that sells videos. I just tell you how it is. If it's great, I say it's great. If it's rubbish, I say it's rubbish. I also share with you my real trades, my real money, put my money where my mouth is. You can see all my money on view. This is my bank account. I have no money in Bank of America, no money in my Lloyd's account in England, and no money in my Chase. It's all here on view. I do what I say, and I say what I do. Today, we're going to get the FOMC report, and we're going to cover it live. This is the very definition of investing. Dig the ditches, read the balance sheets, understand what's going on. Don't listen to anyone on YouTube, including me, that's trying to get you to watch videos. I'm not doing that, however. I'd love you to subscribe to my channel. However, I'm not going to tell you it's doom and gloom when it isn't, just because that sells more videos. That's not what this is about. And that's why 98% of our live viewers are members. Nvidia bounced exactly where we said. Last night, Sensei came on the show, did a tech report, a technical analysis, and said it would bounce off 100. He said on the technicals it would. I said on the fundamentals, and it did exactly that. Not because we're mind readers and we're clever, and not because we guessed, because we looked at the numbers and it was quite obvious what's going on. I have said now for 18 months, the rates would come down in the summer of 2024. For those of you that want to pick me up on that, summer ends mid-September. It ends mid-September. We are going to get a rate cut of the summer of 2024. How did I know 18 months ago? How could I be so certain? And I've been saying the same thing every day, every week, every month for 18 months because it was obvious. The numbers don't lie. And in fact, the US is the problem right now as the Fed use backward lagging indicators. The UK, Europe, India don't, and they've dropped rates again today. The Bank of the Bank of England is about to drop rates in the UK again for the second time, and Virgin Money and I think NatWest have already reduced their mortgages today. It's already happening. The US is just behind. That's all. We've known it for ages. Doesn't matter what people say on YouTube. Doesn't matter about the noise. What matters are the numbers. Do the calculations, sit back, relax, understand what you own, and love it. What a great day. I've dreamed of this day, 3 years in the making, and here it is. And just to show you once again, I am all in. There is my margin, 52572.3. Couldn't be much more in than that, could I? Really? That is showing you that my commitment is what I say, and I say what I do. We're live right now. Join us for more live shows. I'm going to get back to my live audience. Click above my head for all the links down below in the description. Over here and over here, I'll put the FOMC report and something else, probably my analysis videos down here. Have a great day. Do your research. Know why you bought it in the first place. Sit back and relax and let your investments grow. 95% of traders lose money. Just let it grow. Take your time and buy the dips when it's required. Until then, take care of yourselves and each other.